Hello property navigators. Today we are going to discuss rent vesting versus investing and home vesting. We hope that you take away from this video an understanding that you have options available to become a property owner or investor much sooner than sticking with traditional investment ideologies, and all while being able to enjoy the choices and options that living in today's world, here and now, provide us. But firstly, we need to start with understanding that buying any property is one of the most significant financial decisions you'll make in your lifetime, and when it's done right, should be one of the most lucrative. But it starts by understanding that every single property you buy, whether you live there or not, is an investment. Now, we created this mantra here at Property Navigation and we live by it. So let's rip in by unpacking this and kicking off with rent vesting. Rent is dead money. We've all heard it before, which nowadays is a pretty traditionalist way of thinking, but it made sense for the oldies we've mostly all learnt this from. Why would I go and rent and pay someone else's mortgage when I can go and buy my own place and pay down my own loan? Well, in today's times, rent vesting could actually be great for you. Say goodbye to the old school approach of waiting to buy investment properties way later in life. Today's smart 20, 30 and 40-year-olds are taking charge of their financial future earlier on. There's so many different definitions and different ways that people interpret this, so let's kick off by understanding what rent vesting is. For us here at Property Navigation, rent vesting is effectively a property buying strategy where you can rent in a location that you really want to live in, where you can enjoy the lifestyle that living in that certain location provides, but not necessarily where you could afford to buy a property. But you then go and use your money to purchase an investment property that you can actually afford in an area that you don't necessarily want to live. The fact is, not many of us can afford to buy where we actually want to live, especially for our first or second property. And with property prices having gone through the roof, you cannot outsave the market and ultimately save enough to buy a place where you probably want to live. So if you want to live in these areas where you currently cannot afford, you need to learn to leverage your savings. Now, by rent vesting, your money works harder because you will still own an income producing asset that's growing in value over time. Now let's unpack this a little. Traditional views have people thinking that by renting we're paying down somebody else's mortgage, and by buying our own house we can just effectively pay our own mortgage down instead, and that's still going to get us the best result. Unfortunately, that's really not the case. The real issue here is that when you're looking to buy a property somewhere that you would like to live, well, that may not necessarily mean it's the best place to invest your money. It might be an awesome area to live, but it may not get you the best result in the short and long term, and I mean financially. Here's a quick example. If you only ever purchased in a specific suburb that you've lived before, and you looked at the past 5 or 10 years of property performance data in these areas, well, if you did that analysis and then you compared that to the best markets you could have invested in across Australia, you'll probably find that you would have missed out on better investment opportunities and made a lot less money. The difference in what you could have made versus what you did make is called opportunity cost. Now that's the difference between the two scenarios. This is also called opportunity loss when a loss has been taken. For example, I wanted to live in Hawthorn, Queensland when I was younger, and the property I lived in was this. So comparing this property's performance to say if I had bought this property for the same price, which performed in a totally different way over the same time period, the opportunity cost is as shown on the screen. There might only be 5 to 10 suburbs that you ever want to live in, but when it comes to investing, you've got so many more suburbs across Australia that will actually perform far better than the locations that you want to live. So why not take the advantage of having both options of living where you want and also making the highest returns on the property that you bought? Now, importantly, you've got to figure out the numbers that come with purchasing a property versus renting a property. You've got to factor in a lot of other things, especially opportunity cost. And when I say other things, I'm talking about investing in the right assets at the right time and the profit opportunity you have missed by purchasing with emotion elsewhere. So if you're thinking, I can go and buy my own place and it's cheaper to buy instead of rent, well then you're looking at cash flow on a very, very micro level, and this isn't how an investor should be thinking. What you've got to look at is when you're investing into property, it's not about a 2 or 3 year game. It's not simply thinking, I'm going to purchase my property and get the first home buyer's grant, and then what I'll do is I'll move out and then it'll become an investment property. Because if it's going to become an investment property, then you should actually be looking at data and the numbers a whole lot differently than if you were buying somewhere you would like to live. Let's just break this down, covering off how you go about this through an investor's lens. Investing. When you're investing, is that based on emotion or is that based on finances? Well, logically, it's based on finances. You don't go in the boardroom of Samsung and discuss with them, hey, you know what? This is what you guys should do because I like the idea. That isn't a strategy. You don't do that. There's some sort of emotion attached to getting involved on that level. You go in there, you look at the finances, and you look at the numbers, and you look at the stats, and you go, okay, this is a good financial instrument for me to invest in. So time after time, we see people going into buying a property, and whenever they say, well, I'm only going to live here for 12 months or a couple years, well, 9 times out of 10, they base that buying decision on emotion. I know for so many people that go out there and want to live in a property, they're going to say, well, if I don't like that kitchen, I'll put in a new one. That's an emotional decision. When we're buying a place for ourselves, somewhere we would like to live, we're not looking at the whole exercise through the lens of an investor. Now, this video isn't to teach you how to analyze property like an investor. Jump over to our video on property data and research for some pointers on how to learn that stuff. If we were to be purchasing a property through the lens of an investor, we'll be finding the best macro, meso, and micro indicators to help us determine the best location to actually buy in, such as vacancy rates, what yield properties in the area are going to provide, how many more similar properties are going to come onto the market, what sort of supply are we looking at, what's the buying price range to make the investment viable, what are the comparable sales, what sort of infrastructure is being spent, and what streets are the best to live in within the suburb. That's how you invest in property and find where the right properties are to buy and when the right time is to buy in these places. That's the difference in our example from earlier that demonstrated the opportunity cost of buying with emotion rather than financial logic. The reality here is that most people who want to buy in a capital city to enjoy the lifestyle will only ever be able to afford an apartment if they want to live in that 4 to 6 kilometre ring of the CBD to really live the lifestyle. So, will that be the best investment decision? Well, most people will effectively not even look at the indicators we've listed and not assess the property that they're purchasing for themselves as an actual investment instrument. So they're not going to look at the things that really matter to an investor. They're looking at just the short-term metric of, I get to have my own place and pay down my own loan instead of rent. I get to go on Instagram and take a photo next to the sign that says sold and have a good day on social media with people thinking I have my shit sorted. Now this brings us to home buyers versus home vesting. Now, very similar to what we've already spoken about, home buyers are historically super high on the buying with emotions scale. While it's important to find a home that you love in a suburb that you want to live in, it's just as important to make sure you find a property that will stack up financially over the short and long term. Essentially, would you rather look back after 5 years at the value of your property and go, I made 250K, or go, oh, it hasn't done too well, she's worth about 60K more than when we bought her? For many home buyers, especially those that are buying their first home, emotion drives the property buying decision. Emotional decision making isn't just only looking or buying in the areas that you'd like to live or looking for specific things in the property like pink walls and shiny gold door handles. As ridiculous as it sounds, it happens every day, but it also includes the emotion of fear. Fear of not finding a property, fear of losing the perfect property, fear of being outbid, fear of being priced out of the market. Now this happens all the time and it's okay because buying a property is an emotional time and it should mean a lot to you. It's certainly not the wrong thing to feel these emotions, but it's about understanding how to manage them, which starts with an awareness of it, because if you don't, you could lose out on so much money in opportunity cost. Now, when emotions are driving the property purchasing decision, people often place an offer above their budget, which causes financial strain, or they place an offer above market value, impacting their financial gain. Or as I've already explained, they buy the wrong property in the wrong location at the wrong time altogether. So here at Property Navigation, we have coined the term home vesting, or being a home vestor. And it's really pretty simple. A home vestor is a home buyer who thinks like an investor and buys a home that they love that is also a financial asset that will generate significant returns for years to come. Now, this doesn't mean giving up on everything you want in a property. Now, we call these things non-negotiables here at Property Navigation, but rather including more negotiable items. For example, your target suburb might be this. But with a bit of research and data analysis, you find that by simply buying 4 or 5 suburbs away, which is still within a 10-minute drive, your returns could be up to 40% more over the course of 5 years. You might also accept that the house you buy might need some renovations instead of being turnkey, so that you can manufacture some equity. Or the dwelling type might be better off being a double story instead of a single story house, to allow the potential for dual income later down the track when you decide to turn the property into your investment property. Essentially, you're planning in advance how this home purchase fits into your overall investment plan. But to do this, you must overlay investment criteria on your home purchase, and it makes sense. For example, we all know that the location does 70% of the heavy lifting in terms of the property's performance. So once you've made those capital gains, the choice is yours, whether you decide to sell, release the equity, or turn it into an investment property. But you have to make these choices. You need to make some smart decisions before you buy. If you purchased something 2 or 3 years ago and it hasn't really moved in value, but you're thinking, well, now it's an investment, so it's fine, it hasn't dropped in value, just stop. That's not the point of investing in real estate. If you're simply thinking to yourself, it hasn't dropped in value, then that's a very big warning sign that you don't know what you're doing. At this point, from the choices that have been made, it means that your property is not an investment, it's an asset that you think is an asset, but it's actually a liability because you bought emotionally. You see, by making the right decisions now, by using investment acumen, a bit of logic, financial analysis, and ultimately straying away from purchasing with emotion, you can really make a huge impact on your financial position and your entire life down the track, as long as you don't get divorced. Conclusion. Now, this is a lot of information, but it is all based around one key theme, which is to buy right, whether you are rent vesting, home vesting, or investing. Unfortunately, housing affordability is only ever going to get worse. It's been getting worse for the last 20 years, if not longer. So where does that put us? It means that in order for us to purchase in a place that we most desire to live to enjoy that lifestyle, we then have to forego that we don't get the lifestyle anymore because we now have to work a job harder and longer because we need to pay down that mortgage. We also don't have any choice because you can't just decide, I'm not keen on this area anymore because now I've got kids and it's actually not a great area for kids, but now I've got to sell it. Well, what happens if the market's not at the right place? What happens if you can't sell it? That's where real estate has its cons. It's not very liquid in terms of the money and the investment you have in it. Don't be one of those people who still go out there and purchase your own property because you think the government's going to throw some incentives at you, so you think you're going to get a really good deal, because the opportunity cost can be massive and really set you back in the longer term. And lastly, my final thought on rent vesting. In real estate, everyone harps on about financial freedom. You can't escape it. When it comes down to it, building a portfolio and having financial freedom ultimately means doing what you want, when you want, and living life on your own terms. So it means in 20 years' time, if you decide, I want to now go and do that part-time job, or I want to start up that side hustle and make it a full-time thing, you have more choice. But that's all in the future. That's a long-term dream. When you go out and rent vest, you get to go out and test and taste different things right now, like different jobs, starting your own business, maybe go traveling or living abroad, living in different suburbs. You can even move cities if you want. But people wouldn't be able to do that if they had gone out and purchased their principal place of residence or dream home, where they knew they had this mortgage, where they relied on their one source of income being their salary to pay down the largest debt that they ever might occur. And take it from me, I've lived in 4 different countries, totaling over 8 years abroad from when I was 19 years old. If rent vesting was even considered a viable option 20 years ago, I would be so much further ahead. The world we live in now is so different to the traditional way our parents and grandparents lived. And it's sad that you could go and make an old school decision that might mean you're working longer in a job you don't like. The traditional way of thinking leads to a traditional outcome, which is, I'm going to work, I'm going to buy the house, I'm going to pay it down for the next 30 years. And by the time you know it, you're 65, you own your house outright, and you get to live off super with the government telling you what to do. That's not enticing to me at all. And I know from the amazing feedback from you guys, it's not a life that you guys want to live in your 20s, 30s, or even 40s. You're still young. You're still wanting to do things. You want choices. And now more than ever in history, you have more choices to choose from. Until next time, happy property navigating.